Debt-free are the words we often heard from debt settlement companies. If you are suffering from huge debt and desperate to pay it off within a couple of years, even you take extreme measures to cut your living cost, you may look for debt relief options, and debt-free probably something interesting to you. Combining several monthly payments to all your creditors in one, lower your monthly payment, pay less than what you're totally owed. Debt-free in 24 to 48 months. Sounds not bad, right? This is actually what a debt settlement plan may do for you. Debt settlement is a process of resolving delinquent debt for far less than the amount you owe, by promising the lender a payment plan or a substantial lump sum payment. Depending on the situation, debt settlement offers might range from 10% to 50% of what you owe. However, is debt settlement the cheapest way of paying off your debt? And is it the right choice for your situation? Hello everyone, welcome to my channel. In today's video, I will share with you guys all you need to know about debt settlement, especially if you are in deep debt and looking for a debt relief program. Watch till the end. Debt settlement means a creditor has agreed to accept less than the amount you owe as full payment. It also means collectors cannot continue to hunt you for the money, and you don't have to worry that you could get sued over the debt. It sounds like a good deal, but we should know that debt settlement can be risky. 1. Debt settlement can destroy your credit. 2. Penalties and interest continue to accrue. You'll likely be hit with late charges and penalty fees as well. Interest will keep ranking up on your balance, will make it harder to pay off your debt if you cannot settle. 3. There is no guaranteed success. The lender will agree to a settlement, or that it will agree to settle the debt for as little as you had hoped, or they won't agree at all, and you might end up with being chased by collection agencies or even lawsuit. 4. Pay a fee to debt settlement companies, usually 15 to 25% of the total debt amount. By law, these companies cannot charge you any upfront fees. Most of them charge a percentage of each debt when they settle, based on that debt's balance when you enrolled it in the program. Ironically, consumers who enroll in a debt settlement program because they cannot manage their debt burdens, but who have still been making payments, even minimum payments, will need to have less negotiation power than those who have made no payments. So, their first step must be to stop making payments to all your creditors. In the first 2 to 3 months, your creditors would send you late payment reminder letters and report delinquencies to credit report agencies. During this period, your credit score will be hurt, which keeps dropping, and delinquencies will be shown on your credit report. In the 4th or 5th month, the creditors will send you another letter that states they understand if you have any hardship, and they will offer to lower the interests and the penalty fees, even give you some payment plan options. If they still cannot hear any response from you, they will close your accounts. And afraid of getting nothing back, the creditors will agree to lower the debt you owed and negotiate a settlement plan or a lump sum payment with you. However, some creditors probably forgive as little amount as you have hoped. What's worse, some creditors won't be so patient and send you letters or other offers. Once you have missed the payments for 2 or 3 months, they will close your accounts and file a lawsuit against you. Also, before entering in any debt relief program, we should be aware that debt settlement is mostly for unsecured debt, such as credit cards, personal loans, and business loans. For any auto loans or mortgage, if keeping missing payments, you will lose your collateral, which means you will lose your car or your property. Besides, after entering the debt settlement, that means you cannot take new loans or apply new credit cards before your settlement is complete. If you feel that debt settlement is the best or most appropriate choice for you, and you want some assistance in pursuing debt settlement, here are some tips for choosing a company wisely. 1. Check with a Better Business Bureau to see if there is a history of the complaints. 2. Stay away from any company that seeks money in advance or guarantee that your debt can be settled. 3. Make sure fees are structured as a percentage of the debt eliminated rather than of the debt balance at enrollment. That gives a company incentive to trim more of your debt. 4. Avoid companies that promise to help you challenge debts to have them declared invalid. 5. If you don't want to use a debt settlement company, consider using a lawyer or doing it yourself. A lawyer may bill by the hour, have a flat fee per creditor, or charge a percentage or debt eliminated once you are too far behind your payments. It usually doesn't hurt to reach out to your creditors. Some banks have hardship programs that may be able to help, but be certain you can afford any reduced payment options your bank may offer. If you want to try negotiating a settlement yourself, educate yourself on what's likely to happen, you may want to gather as much cash as you can to make a lump sum offer. Whether this means taking a part-time job, selling sports equipment, or borrowing money from your cousin. Creditors prefer to take a lump sum offer which gives them money immediately, rather than taking a chance on payments that might not come. Also, be aware that some creditors may have a policy against settling debts. Debt settlement can be risky, while it could be a right solution in certain situations. Here are more points for you to know what you are getting into before signing up for any program. 1. If your debts are already with third-party collectors, although the average settlement amounts to 48% of what you originally owed, that number is a bit skewed. If your debts are still with the original creditors, settlement amounts tend to be much higher. You can end up paying up to 80% of what you owed if the debt is still with the original creditors. Settlements tend to be higher with the original creditors because they want to recover as much of their loss as possible. But with a debt collector, they purchase your debt from the original creditors for a small percentage of what you actually owed. So essentially, they can accept a lower settlement amount and still make profit. The other reason you want most of your debts to be in collections is to avoid additional credit damage. As we explained above, debt settlement companies will advise you to stop making payments if your debts are to charge off status yet. This means you are facing additional credit damage from a fresh round of missed payments. On the other hand, if your debts are already in collections, the credit damage is already done. You want to get collection debts discharged as quickly as possible so you can get to recovery and rebuilding your credit faster. 2. You won't have to pay any fees until your debts are settled. In 2010, the Federal Trade Commission enacted the advance fee ban on debt settlement companies. The rule prohibits any debt relief company from charging fees before settling or reducing a consumer's credit card or other unsecured debt. This means a debt settlement company cannot charge you any fees until they have officially settled at least one of your debts. So, you shouldn't be required to pay any setup or month administration fees on a debt settlement program. If you do, then the company must offer a money-back guarantee. If they don't, it is a sure sign of debt settlement scam. 3. The older your debt is, the less reason there is to settle. Every state has a statute of limitations on how long a debt collector has to sue you in civil court to force repayment of the debt. The maximum statutes are 10 years, so regardless of where you live, there is no more than a 10 years window where a collector can take you to a court to collect on a debt. You should check with your state attorney general's office to find out what the specific statutes of limitations is for your state. If your debts are old and close to the statute, there is less reason to pay them anything. After 10 years, they can still contact you to attempt to collect, but they have no legal recourse. And if you tell them to stop contacting you, they must honor that request. 4. As debts get closer to the statute of limitations, collectors will take what they can. The statute of limitations on debt can be used as a bargain chip for negotiation, a lower settlement amount. As the debt gets closer to that statute, the collectors will be willing to take what they can get. So, you can get out of the debt for a lower percentage of what you owed as the clock runs out. In some cases, you may be able to settle for much less than that 48% of average. Collectors holding old debts may be willing to settle for 20% or even less. The statute of limitation clock starts from the debt first became delinquent. Make sure to check your record carefully and use the age of a collection account to your advantage during negotiations. We all want to settle a debt for less than the full amount we owed, but it's not without the risks and pitfalls. It can be a good solution in certain situations. Okay guys, thanks very much for watching my video. This is all for today. If you found my video helpful, please drop a like button. If you like my contents, please subscribe my channel for more future videos. I will see you guys next time.